Hello guys and welcome to another video. My name's Mark, I'm an entrepreneur and property investor, and in today's video we're going to be talking about refinancing, why you should do it, and how in the last few days I've managed to release nearly £75,000 into my bank account, which will allow me to reinvest in property and buy some more fantastic deals. I'm also going to run through how much it costs and what to look out for, because I think it's really important to be completely transparent. I'm also going to show my completion statements, so you'll be able to see exactly what a completion statement looks like, and I'm also going to show my bank account, so I can show you exactly how much money hit my account. Because I think quite a lot of people lack the level of transparency where they're willing to show you that. Now obviously I'm going to detract a few details from there. I'm going to detract the address, I'm going to take off some of the transactions, probably my account numbers. I'm sure you can appreciate I might want to take those off, but ultimately I'm going to show you as much as I possibly can so that you can see that I'm being completely transparent about how I invest in property and where quite a lot of the money comes from when it comes to capital appreciation and refinancing. Now before we get into the video, if you could give it a big like if you appreciate that level of transparency, that would help me out with the algorithm, and it helps other people discover this sort of content where they can see everything without any agenda, and I can give them as much information as I possibly can. And if you haven't already subscribed, please consider subscribing. We're giving away the dividends to our subscribers every single month. This month we've given away, I think it was £40, is that right, Nick? Yeah, £40 this month to our subscribers. If you haven't already seen that video, click the card. Nick, can you put the card up? Is that right, yeah? There'll be a card in the description and you'll be able to click through to there and you'll be able to see that video and comment on there and win the money yourself. We're drawing that on Monday it's the second today, so it'll be the 9th, Monday the 9th. Anyway, without any more fluff, let's get into the video, let's get into refinancing, let's understand why we would want to refinance and exactly what it is. So first of all, what is refinancing? Now essentially what refinancing is it's drawing money down upon the property and creating a new finance arrangement with a new lender or potentially even the existing lender. Now you might do that for one of two reasons. Number one, you might do it because your fixed term has come to an end, or number two, you might do it because you want to release some equity. And that might be because the capital has either appreciated over time, or it could be that you've pushed the value up, as I have in one of these instances, or both of these instances to some extent, through the BRRR strategy, which is buy, refurbish, refinance and rent. So today what we're going to do is have a look at two completion statements. We're going to have a look at exactly how much I've got back out of those deals and exactly what fees I've had to pay. Now first of all, what I want to do is talk about one of the reasons that you might refinance. Now that is because the capital appreciation aspect of property. And what that means is property over time, it tends to go up. So if we did a graph, it would look something like that on an upward trajectory. And if we think about the last couple of times when properties dipped, 2007, I'm thinking 99 to 2000, there was a little dip, 89 to I think it's 91, something like that. It's something like that, the cycle, if you look at it. And we had a dip actually in 2020. It was just very, very short-lived. If you're in the market for buying property in 2020, there were some fantastic deals to be had between April and June. I think I bought 2 or 3 very, very cheap, about 10% off I was getting. So I think there was a little dip in 2020 as well. And we're certainly on an upward surge right now. But over time, as you can see, the market's gone up. Now, one of the properties I bought in 2010, I paid $176,000 for. I've most recently, last year, had that revalued at 400K. Now, you can see why I might want to take some of that money out by borrowing against the asset. It's gone up in value a significant amount, the rent's increased as well, and for me, removing that money allows me to invest in other properties. So refinancing is a really interesting way of getting access to the money that you've built up within a property, understanding that you are borrowing the money. It's not free money, but it is borrowed. The other great thing about refinancing and getting money out of properties is it's completely tax-free. Because it's a loan, it's completely tax-free. You don't pay anything on the money that you receive from there. So bear those two things in mind. So over the long term, if you look at UK property, it grows by about 6% per year. Now I accept different areas, different regions have different growth patterns, but I have to take an average, and that's 6% a year. And at the moment, the average house price is sitting around 250,000. So what does that mean for anybody who's holding an average house? Well, it means on average, each year, their investment's going to go up by 12 plus 3, £15,000 a year. So every year that they hold that asset, it's likely, on average, and I accept some years are better, some years are worse, but on average, they're going to make £15,000 worth of capital appreciation. So over the course of a 2-year period, and quite often fixed rates are 2 years, they would make 30,000. Now, when you borrow, you're generally borrowing about 75% LTV, so that means that you're going to receive somewhere in the region of £24,000, something like that once you've got that LTV sorted out. So again, a really good access to some capital every couple of years, even if you just held an average house. So the first thing I want to do is say 6% average growth, have a look at the quality and the volume of your assets and understand how much you're making in that. For me, I've got about £3 million worth of property, which means that every year on £3 million at the moment, obviously this compounds up over time, I'll be looking at a capital appreciation of somewhere in the region of 180k a year. And I know that seems a lot, but it wasn't always that way. And I started with one property back in 2010, and I just refinanced and saved some more and refinanced. Nothing I've done has been that particularly special. It's just following the standard rules of property investing, which is buy, add value, hold for the long term, refinance when you can, buy more. That's all I've done. Nothing particularly special. I haven't built big housing estates. I haven't done anything particularly special. I've just bought, refinanced, held for the long run. So generally speaking, I buy on a 2-year fix, and the reason is every couple of years I want to extract the money out if I can. So stuff that I bought in 2019, I'm looking to refinance this year. For example, there's a property in Kettering that I bought for 130,000, 3-bed. We did a very small renovation, not enough to warrant refinancing, certainly couldn't call it a BRRR. But today, with the market having a bit of a tailwind, it's probably worth 180, 185, something like that. And we'll be able to refinance about £35,000 out. There's a couple of properties in Sheffield that I've got coming up this year as well. But a 2-year fix means that I can get access to that money every couple of years. So I personally prefer 2-year fixed rates because it means that every couple of years I have the opportunity to get access to those funds. Now, the other reason you might want to refinance is for the BRR. And obviously that is buy, refurbish, refinance, rent and repeat. So this R here is the refinance R. And one of my houses in Corby, for example, very much was a BRRR deal. So we'll go through that one and we'll go through the completion statement in detail in a minute. But essentially I bought it for 116,000. I spent about 35,000 on it once you add everything in. And we refinanced it at 190,000. So we actually generated, I think, 47,500 back, which means we probably left in the deal somewhere between 20 and 25,000, something like that. And it's generating profit of about £650 a month. So a good deal all in all, and it will be completely free within 2 years. But it's really important to say that the refinance part of that deal is absolutely essential to move that property off a bridging loan and to get the money back out. Now, the other property on here, this Didcot one here, now this wasn't really a refinance opportunity. This was more of a HMO conversion. And actually, when we got the revaluation done on it, and I would hasten to add, if you guys go onto Rightmove right now, have a look and see if you think the valuer was stingy. Essentially, what they said was I bought it for 275k, they valued it at 310,000, and essentially they just added the value of the refurb work that I did. But I bought that cheap. And if you have a quick look in Didcot, have a look at 4-bedroom houses. This is now a 5-bedroom HMO, but it was a 4-bedroom house to start with. You will understand that that house is probably worth at least 350. Now, I understand that sometimes you win and sometimes you lose. This is going on to a 2-year fixed rate, and I very, very much expect to get it revalued much higher later on down the line. That said, I will take the 24,500 today, of course, and I'll move that into another property. Again, understanding the opportunity cost. And that's why that's next on my list, because I want to go through another reason why you would refinance. And that's because the opportunity cost of leaving the money in there is that I won't buy something else. So if we use the Didcot house for an example, let's say, for example, that £25,000 would be enough for me to buy a £90,000 house, give or take, and for me to not tenant it, not do anything with it, which would be crazy, but bear with me and we'll work through this. The capital appreciation alone on that would be about £500 a month. Well, slightly under £500 a month, maybe 475, 480, something like that. Just capital appreciation alone. If you then added in a tenant, added in rent, you'd be adding another £500 on top. So every month that I don't buy that house, I lose about £1,000 a month. And this is what we call opportunity cost. I'm not losing the £1,000 a month, but I'm losing the opportunity to have the £1,000 a month. And this is why refinancing at the earliest opportunity is really, really important. Bearing in mind, obviously, sometimes you do have early redemption fees or early redemption charges. So it's really important that you understand that you may have to pay early redemption charges if you're still within your fixed rate. But if enough value has been added, if there's enough money in there that the opportunity cost is greater than the early redemption fee, then it's going to be worth doing. And it's only up to you to make that decision of whether you believe that your property has enough money in it that the opportunity cost outweighs the early redemption charges. On this channel, I just want to say what I would do. In most instances, when I've done the calculation, and in the past I have paid early redemption fees, certainly on this property up here, I had it on a 5-year fixed. And in year 3, I realised I had about 100 grand in there. I had to pay an early redemption charge, I think of about £8,000. It's a lot. But every month I wasn't doing that, I was losing like £1,500 a month. And I worked out very quickly, I couldn't wait 2 more years. I had to get the money out, I had to pay my stupid tax, as I called it, and I had to get that next property underway. And I did, and that property made me about £1,500 a month in rental profit every month for the last 3 years. And on top of that, it's also appreciated by about £70,000. So looking back, you would say I'm super smart. At the time, I just did the maths, worked out what was best, and moved forward with a plan that was suitable for me. So that would be my advice, is just to make sure you do that. So now, as promised, what I want to do now is just put up the bank statement, Nick, if you could do that, and you can see the money coming in. And I'm not doing that to show off or anything else. I just want to make sure that I'm being completely honest and transparent, and you can see that money hitting my account. There's no bragging. I've taken off my account balance. I don't want to do anything like that. All I want to do is say what I say is happening, and here's the proof. The next thing I want to do, Nick, is just put up the completion statement. And if you do that for the house where I took 47,500 out and just put me in the corner or something, that'd be great. And what we'll do is we'll just have a look at how much it costs to do a refinance. So first of all, there's the fees. Now this was, in this instance, about £1,000 for the solicitor's fees. That's pretty normal. Then you've got the land registry, and you normally have searches, you have bankruptcy searches, and then you have a registration. It's about £40 all in all. And then you have the company's house registration if you're going to be doing it within a limited company structure. That's about 15 quid. So you're normally looking around £1,200, £1,300 for a refinance. But on top of that, you've got to remember you've also got to pay a valuer. In this instance, on that one, I think the valuation was included in the mortgage fees, but I think the mortgage fees couldn't be added onto the loan. I think they were deducted, if I remember rightly. So that one, we got a little bit less on one side, we won on the other. It generally works out that your fees are going to be a couple of grand. And we always call this the fee drag on this channel. We understand that every time we do an action, people take our money. The solicitors, the mortgage companies, they all have their fees. And it's just a fee drag on your wealth generation. That said, the opportunity cost of me not getting £47,500 would be huge. I could buy a £200,000 house with that. Every single month, I'm going to be making roughly £1,000 plus a month in capital appreciation. I've got to do it as quickly as I possibly can, right? So that's why you would do it. You've got to understand why you would do it. The opportunity cost is greater. And for me, because that was on a bridging loan, it actually means that my mortgage payments are less. The previous payments, I think, were £900 a month, and it's gone down to about £400. So my profit has gone up, everything looks better, and I get £47,500 back. Great, right? The second one is the HMO one, so we'll bring up that one now, Nick. And as you can see, exactly the same in terms of costs. The main difference is that we've added a search pack, and that was just something that the lender requested and required in order to complete on that mortgage. Because it was a HMO, they wanted to do a search pack which included water, environmental, a few other things, but it was added on, and unfortunately it was just a condition of the new mortgage. Again, £24,500 out of that. Not a small amount of money by any stretch of the imagination. We were hoping for so much more though. And as I said, go on to Rightmove, Didcot, 4-bedroom houses, 5-bedroom HMOs. Have a look and see what you think it's worth. It's in absolutely fantastic condition, all been re-kitted out. I spent about £35,000 on it, which is how they came up with the new valuation, which was 275 plus 35 equals 310. So that's how they came up with the valuation. Actually, interestingly, it was 2 valuers that did that. So I just decided, let's cut our losses on this one, move on. The market will prove its worth over the next couple of years. Let's get this money back into play. And even while I was arguing over it in the last couple of months, a couple of opportunities have passed me by. So I understand the value of speed. I wanted to get it all sorted. So guys, I hope that gives you a really good idea about refinancing. I hope my transparency has been really useful for you. I've really enjoyed putting this video together. We're in our new studio over in Newbury. We're going to be doing the meetup very, very shortly, so stay tuned. Make sure you're subscribed, hit that bell notification, and I'll see you next time. Cheers, guys.